In today's analysis, let's dive deep into the dynamics of SoFi Technology, SoFi, and why this stock is set to capture the attention of investors in a big way. With the market's momentum shifting and key catalysts lined up, all indicators suggest something monumental could be on the horizon for SoFi. This isn't just about quarterly results. It's about long-term profitability, strategic growth, and the potential to disrupt the financial industry. So, let's break down the factors that make SoFi a stock to watch. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. First and foremost, profitability is the highlight. SoFi has reached a crucial point in its journey with full-year profitability expected for the first time in its history. Achieving this milestone is not just a corporate checkbox, but a signal to Wall Street that the company is on the path to sustainable success. Earlier this year, when SoFi achieved its first quarter of profitability, the headlines were ablaze, and now the stakes are even higher. This signals a paradigm shift in how the company operates and its ability to thrive, even in challenging macroeconomic conditions. Speaking of macroeconomics, the landscape seems poised to favor SoFi in the near future. With potential interest rate cuts and an uptick in M&A activity and IPOs anticipated in 2025, SoFi is strategically positioned to gain significant market share. The financial services sector is becoming increasingly competitive, but SoFi's approach to blending traditional banking with innovative tech-driven solutions gives it a significant edge. Now let's talk about Galileo, the tech platform under SoFi's umbrella. For over 2 years, management has been notably tight-lipped about developments related to Galileo, yet whispers in the industry hint at significant progress behind the scenes. Galileo has reportedly been in the proof-of-concept phase with major legacy banks. If an announcement regarding a partnership with a top 10 bank were to surface, it could propel the stock to new heights. Galileo's potential as a game-changer in financial technology cannot be overstated, and any confirmation of its success would likely trigger a sharp rally. Another key factor to consider is the short interest in SoFi stock. Currently, the stock has a short interest of around 12%, translating to over 100 million shares. This level of short interest creates the perfect setup for a potential short squeeze, especially if positive news or unexpected announcements catch short sellers off guard. To put this into perspective, other companies with much lower short interest levels have seen massive price surges. For instance, Robinhood stock recently soared from $7 to $50 with just a 2% short interest. Imagine the magnitude of a similar rally for SoFi given its significantly higher short interest. The market dynamics leading into the earnings announcement also paint a fascinating picture. SoFi recently reached 3-year highs, touching around 18.40 cents before experiencing a controlled pullback. This is indicative of healthy price action rather than a speculative pump-and-dump scenario. In contrast to previous earnings reports where the stock showed minor gains on the final trading day, this time the flat performance suggests measured anticipation. Investors appear to be holding their breath, awaiting the next big move. Looking back, SoFi's growth trajectory compared to its peers speaks volumes. Just a few months ago, the disparity in market valuations between SoFi and Affirm raised eyebrows. Despite Affirm reporting a $100 million loss compared to SoFi's $61 million profit, it still commanded a significantly higher market cap. Fast forward to today, and the tables have turned. SoFi now holds a market cap of nearly $20 billion, while Affirm has dropped to $17.6 billion. This reversal underscores a fundamental truth. Profitability is the ultimate driver of long-term value. As SoFi enters 2025, it is poised to deliver significant EPS, earnings per share growth, potentially expanding from 14 cents to 40, a nearly 200% increase year over year. This is exactly the kind of performance Wall Street rewards. Another interesting aspect is the context of SoFi's upcoming earnings report. Previously, the company reported alongside industry giants like Google, PayPal, AMD, and Visa, sharing the spotlight with nearly 200 other companies. However, this time, the landscape is very different. Only 37 companies are reporting on the same day, and SoFi ranks among the top 5 by market cap. This change in timing and company lineup could mean greater focus and attention on SoFi, amplifying the impact of any positive news or announcements. Institutional investors are also taking notice. Recent data shows that major players like Charles Schwab's large cap ETF and other institutional investors have been increasing their positions in SoFi. These moves reflect growing confidence in the company's potential to break into the S&P 500, which requires a market cap of $20 billion, a milestone SoFi is within striking distance of achieving. Inclusion in the S&P 500 would not only validate SoFi's growth story, but also attract additional investment from index funds and ETFs, further boosting demand for the stock. The stars seem to be aligning for SoFi in terms of timing, profitability, and strategic execution. The company's ability to navigate macroeconomic challenges, coupled with its innovative tech platforms like Galileo, positions it as a frontrunner in the financial sector. With full-year profitability on the horizon, a potential short squeeze in play, and increasing institutional interest, the conditions are ripe for a major breakout. In conclusion, SoFi is at a pivotal moment. Whether it's the possibility of groundbreaking announcements, a massive reduction in short interest, or the achievement of key milestones like S&P 500 inclusion, the future looks incredibly bright. For investors, this could be a rare opportunity to get in on the ground floor of a company that is not just disrupting an industry, but redefining it. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below.